very excited to be hosting the Deputy Minister of Finance, Dr. David Masondo, in South Africa. Dr. Masondo has actually been he's an African National Congress National Executive Committee member and is serving in the Economic Transformation Committee and has served in various positions of leadership. He read his PhD at NYU in the USA, with his thesis focusing on the post-apartheid state industrial policy and investment in Southern Africa. With the Deputy Minister of Finance, we're also delighted to have Vuyo Ntoi, who is the co-managing director at the African Infrastructure Investment Managers, AIM, and he's no stranger to the development journey or financing of infrastructure on the African continent, where he was recently involved in the first IPP in Mali, been involved in a variety of IPPs in Ghana, and more famously known for his involvement in the Lekki Concession Company. Please join me in welcoming our panelists on stage. Thank you so much. And obviously, we've had a fantastic backdrop earlier this morning from Ghulam and all the other panelists. And our topic is mostly around anemic growth that we've seen across Africa, and how do we revive that? You know, we have a lot of public finance management challenges, but we have very high investment needs, particularly around industrializing, overcoming productivity obstacles. And I think it's quite apt to have the Deputy Minister from a public policy perspective, but also Vuyo, who's been quite heavily involved from a private capital standpoint. Of course, we are living in precarious times where the global economic environment's quite precarious, to put it very mildly. External capital for a lot of infrastructure investment is going to be quite expensive potentially for a while. Domestic savings still quite weak across many of our markets, but at the same time, we need to get economic growth close to potential, above potential, to increase employment and boost dollar earnings to avoid a lot of socioeconomic challenges that we've seen over the last few decades or so. Deputy Minister, perhaps we could start with you. And how do you juxtapose the challenges at a domestic level in South Africa in relation to savings and investment versus the state investment required in domestic infrastructure? So, I mean, from a South African standpoint, how have you viewed this over the past few years?
No, thanks. I think you're right. I think our savings are low, and the investment demands are very high. And given our low domestic savings, notwithstanding the deep capital markets that we have in South Africa, it's important for us to also attract foreign capital to flow into South Africa. And I think we do understand that for capital to flow into South Africa, I mean, investors are managing risk and enhancing returns. And one of the key things that at the macro policy level, we've been working on as a fiscal authority is to put our debt at sustainable level. Debt in itself, it's not bad. The question is whether the economy can afford it. Because if the debt is unsustainable, it raises the sovereign risk premium, and that raises the cost of capital, not only to bonds, but also to equities. So we've been on the path of keeping our debt, to public debt, to sustainable level through managing our fiscal policy in a prudent manner. But secondly, we are at a macro policy level, making sure that our inflation it's low. Our exchange rate is also stable because you don't want an investor to come into a jurisdiction and there's a lot of volatility in that jurisdiction. So let me stop here, and I can talk more about what are other things that we're doing concretely to get private capital into the economy. Because also when you grow your economy, you're also setting good conditions for raising resources domestically. Because as the economy grows, your taxes, revenue increases, and you can invest that into a whole range of things, including infrastructure. When more people are employed, both the employer and the employee, they make pension contributions. So our savings pool will definitely increase on the basis of the domestic economic growth. But foreign capital is also very, very critical.
Well, thank you, Deputy Minister. Before we sort of delve deeper into private capital, which I guess we will come in and talk about, just staying with you for a minute, in terms of just economic growth and the deficiencies within economic growth, what are some of the structural or cyclical issues that you'd like to highlight, particularly in South Africa's context?
So let me start with our network industries. Our network industries have been dominated by state-owned entities. And for some time, our economy has not been growing because of the supply side constraints, supply of electricity, freight logistics, water, skills. And we liberalize those industries in order to allow the private sector to participate. So we change the structure of our network industries to deal with the dominance of different state-owned entities. Energy is one of those in which we said Eskom cannot be the only supplier of energy. We have seen the systemic risk that Eskom posed when we had the high intensity of load shedding. Similarly, with the freight rail, we said let's liberalize the freight logistics sector, in which we allow the third parties to operate on our rail, on the ports. So insofar as that is concerned, we are doing a lot of work in that regard. I think one of the speakers earlier spoke about the importance of South Africa in importing vehicles to the continent. And I think for us, the African Continental Free Trade is a great opportunity for us to increase volumes in South Africa. But the key challenge that we've got to confront is the fact that the continent, or many jurisdictions in the continent, they import second-hand vehicles. So as we talk about the structures of our different industries, both in the public sector, but also in the private sector, we've got to think continentally, regionally, on how we support industrialization and have different location for specialization, because we do have comparative advantages based on the endowments and capabilities that we have as different jurisdictions on the continent. Because it doesn't help to say, let us industrialize on the continent, but our policies are not aligned. I mean, in South Africa, second-hand vehicles are not, you cannot import them. It's not allowed, but in other jurisdictions, it's allowed. And therefore, the synergy, the harmonization of policies on the continent will be quite critical. And the African Continental Free Trade provide an important basis for us to get our industrialization going.
Thank you, Deputy Minister. I think you bring some important points, particularly around the drive to industrialize. Perhaps you could also jump in. You manage one of South Africa's largest domestic infrastructure equity funds, the IDEAS fund. Can you give us perhaps a high-level overview of some of the diversified projects you've worked to develop?
Okay, thanks for that, Gibran. And it's a great pleasure to be here on this panel with the Deputy Minister. And perhaps worth mentioning that the Minister has been a very willing ear for the private markets industry in South Africa. Sorry, another hat I wear is as chairman of the Southern African Venture Capital Association, and we've had a number of engagements with the Treasury that have been fruitful to date. Just speaking to the AIM business and the funds that we manage, the Ideas Fund is indeed kind of a large domestic investor in infrastructure, and the fund is open-ended and has been around for the last 25 years. And I think largely owing to the scale of the South African pension fund market and the appetite for kind of long-dated, relatively de-risked infrastructure assets, we've been able to grow the NAV of that fund to about 30 billion rand. So it's quite a dominant player in the South African infrastructure space. And that fund has been around. It started investing in the likes of the urban and long-distance toll roads, the Bokwenas, the Tracks of this world. It's been involved in public accommodation PPPs, such as some of the government departmental buildings, and then also in multiple rounds of the renewable energy project. So it's I think, still the single largest investor in REAP projects, for instance. And these have largely been successful, and I think it's kind of a testament to the partnership that government and the private sector, represented through funds such as ours, have achieved. More recently, we've been growing into, let's call it, more private infrastructure spaces. So we are involved in digital infrastructure, and through our platforms, I think compared to the likes of CIVH, Massive, and Telkom's OpenServe, we're the third largest player in the fiber to the home and fiber to the office market. We're involved in cold storage, where we've established a platform mainly looking at providing food security in the region, and also involved in bulk freight and port logistics through at least two platforms that we're involved in. Another play that's kind of been a space we've played an increasing role in recent times has been in the commercial and industrial power space, where I think we are currently looking at a pipeline of between 1.5 and 2 gigs of power on a bilateral and on a many-to-many basis in the commercial and industrial power space. Again, testament to the government's liberalization and allowing the private sector to play a more meaningful role in generation. The other spaces we're looking at include grid flexibility and transmission infrastructure, so looking to play a role when that comes to market. We're involved in the commercial reuse water space at the moment through a partnership we have with the international player Suez, and we think that that's a conduit we can use for involvement in the broader water space in South Africa as well. So yeah, I think quite a few projects across multiple sectors that we're looking at in South Africa. And maybe it's worth mentioning as well that we're also a continental player. So in addition to the Ideas Fund, which invests predominantly in South Africa, we've got a Pan-African fund that invests dollar capital into projects across the continent, obviously seeking dollar returns. So the nature of the projects it supports are slightly different, and we managed to close that fund at circa $750 million towards the end of last year, together with about $200 million of co-investments. And this funding is largely from sovereign wealth funds, development finance institutions, and I think gladly also a large amount of commercial money into the space as well, which is something we've historically struggled to get. So in terms of broad interest in the Pan-African infrastructure space, I think if you've got a clear thesis on what you're investing in and it's clear to investors what the economic benefits will be, then you do get traction.
Thanks, Vio. I'm going to put you on the spot now a bit because the Deputy Minister cannot speak about other sovereigns apart from South Africa. And obviously you've got extensive experience in...
Unless I cause a debate.
We don't want you to do that. So with your extensive experience, across the continent, perhaps you don't have to specifically name, certain projects, but just give us a bit of a snippet of some of what worked, so the good, the bad, the ugly, in terms of regulatory issues, have they improved? Has the PPP framework become a lot more robust? Pension fund reform to boost domestic savings? I don't know what you're thinking.
Yeah, I think that the key thing is that Africa is not a monolith, right? It's lots of different economies with lots of different regulations, with governments in differing kind of fiscal positions. Yes, there are broader themes that apply across the continent, but I think, and maybe let me do it by juxtaposing some parts of the continent versus what South Africa has done. So I think the beauty of the South African market that's allowed us to build the level of portfolio that we've built over the years has obviously, in the first instance, been underpinned by a deep capital market, a very big pension savings market where there's capital available to invest in the private markets. And obviously, in South Africa, there's been the recent Regulation 28 amendment, which has allowed increased allocation for pension funds to private markets, either private equity or private debt. We're yet to see a big allocation change, but I think this will come over time. I think pension funds are currently involved in trying to fill their offshore allocation budgets. The Regulation 28 change has also allowed more offshore allocations, but I do think that over time the allocation towards kind of productive private capital will increase. But moving on to South Africa and the policy landscape, I think maybe just using the REAP process as a case study, where South Africa essentially kind of set up a process that was multiple round and scaled, right? So I think it's very important, scale is very important. Scale allows big businesses internationally to kind of, it props their ears up and they then believe that there's a viable market of scale that they can participate in a country. And then further to that, the fact that there's repeatability, multiple rounds, means that kind of entities such as ourselves and other international players are then able to establish businesses to pursue the opportunities in country. Because if you don't win in the first round, you might win in the second round or third round. So there's kind of limited risk to establishing businesses, whereas in a one-shot process, one is not really going to establish a platform to pursue the opportunities because of the risk involved. And I think that's really been the benefit of the South African market, has been the multiple round programmatic nature of the infrastructure assets it's put out. Of course, we do complain about the pace at which projects are being released, and we think that that could happen with more regularity and with deeper scale. But by and large, I think the partnership with the South African government in getting projects off the ground has been great. In other instances, we also believe that it doesn't necessarily mean that government should be the procurer. You can have instances where government just loosens the regulatory bounds, such as with the commercial and industrial power market, where essentially government's not procuring the power, but the private sector is procuring on its own on an almost self-provision basis. And what's then happened is, because of access to grid, etc., the private sector has essentially built additional generation to go on grid. And the benefit is almost an externality from that private contracting, is that you have more power on the grid. So I think the rest of the continent, in some ways, and this is, again, Africa is not a monolith. There are certain markets where we as a business will continue to contract on a government-backed project basis. The likes of Cote d'Ivoire, Kenya, for instance, where there's still a level of policy coherence with private sector participation in the infrastructure space. There are, of course, markets where we've experienced big setbacks. You mentioned the power project we did in Mali. Obviously, with the recent geopolitics, the coups, government's kind of ability or motivation to abide by the contracts it signed has been limited. Similarly, in markets such as Ghana, we've seen government reneging to the detriment of the private sector on some of its obligations around the power market. And what that means is when you come up with a power process now or next year, the private sector is not going to be there because there's no trust and credibility built. So I think the importance of building trust and credibility over time is what really can help in driving the private sector's participation. I think that's a kind of a short snippet. Is there are lots of markets on the continent where we will not do government-backed deals because government doesn't abide by the contracts it signed. But nonetheless, we still move forward on a private sector basis. So the way we see it is that the infrastructure development market in some of these markets is more commercial and industrial play. And the benefit to communities will arise almost as an externality to that private contracting, which is almost on a self-provision basis.
No, thanks for you. And as you say, a credibility deficit can become quite scarring perpetually and needs to be addressed for private investment to continue flowing. Deputy Minister, let me bring you back. You initially mentioned the continent's free trade agreement. And clearly there's been a concern that there hasn't been enough infrastructure connectivity to get that off the ground, in addition to the existing non-tariff barriers, for example. But as a public finance management expert and the role that you've had over the years, do you see a correlation between investment in infrastructure and a benefit to broader society? And the reason we ask that is there has been general concern that there's been overspending on projects that could be perceived to be white elephants.
Yeah, I think firstly, we all know the funding gap. The numbers that are being thrown around, it's around 130 billion to 170 billion US dollars in terms of the annually for infrastructure financing gap. And the problem is not money. Notwithstanding, here in South Africa, our savings rates are very low, but the problem it's not money. The first issue is, if I can ask, we know the funding gap, but if you go around and say, show me the projects, very few projects will be put on the table. So I do think that the working on the bankable projects, it's quite important. South Africa, we are drawing from the RIP program, helping departments to put together bankable projects so that when you go around and say, please invest in infrastructure, yeah, it's a bankable project, it makes commercial sense, the returns are good. You guys who do capital budgeting, you do your cash flow, you see where the money will come from to make sure that returns are realized. So that's the first thing, that we really have to work on the bankable projects for the continent, and not just country-specific projects. I think we need to think about cross-border infrastructure. The Labido corridor is just one example. If you are to capitalize on this African continental free trade, you really need cross-border infrastructure. And if you are to attract big money, great money, not only from each sovereign, but from outside. People are looking for big tickets. They are looking for scale. If you're going to still be working on small projects, that's okay, but we also have to think about continentally, regionally, how we get private capital to move in there. But for that to happen, the incentives and the financial structures need to make sense. I mean, there's no doubt to your question about the importance of the infrastructure. If you are to be competitive as a continent, your cost of doing business have to be lower. If your infrastructure is competitive, if your freight logistics work, you're able to take things from here to the rest of the world and things within the continent, clearly your competitiveness will be increased. But that infrastructure must be affordable to the users. The tariffs I know industry has been complaining and keeps on complaining about the tariffs of Transnet, but we are at a point where you have to build the capacity of Transnet to even take goods from outside, and that's for that reason that we said, look, let's put the right financial structures to enable private capital to move into those structures. And Nwako is here from the Department of Transport. He can speak more about some of the reforms that we've undertaken and the things that they've done. The network statement is out to allow third-party access into rail. But the rail infrastructure itself requires a lot of revamping, and we're also calling the private money to get in there. But like I said, the incentives, the structures have to make a lot of sense. As National Treasury, we also said to sort out the metro's infrastructure, the trading entities, they've got to be separated out of the municipalities so that they can produce their own financial statement. They can go out in the market and raise money in order to boost our own infrastructure, because cities are critical for economic growth. So for me, to sum it up without getting into a whole range of reforms that we've undertaken in enabling the private sector to get into the infrastructure, the key thing for me is the right structures and the right incentive. Money is not a problem. It's what are the conditions that you're setting in place to enable the investors to generate better returns. I mean, I would not like, as wearing the other hat of being a public sector asset manager, PIC, throw money into infrastructure that is not going to generate good returns for those employees. So all these things have to make commercial sense. And one of the things of making sure that you get money to move into infrastructure, it's de-risking. We're working with the IFC now on the credit guarantee scheme, starting with the transmission, because the transmission infrastructure of 14,000 kilometers requires almost 400 billion. ESCOM itself, its balance sheet, I nearly said it's screwed, but it's challenged. The fiscal position, you know, our debt level, fiscally we are constrained. And through this credit guarantee scheme, we don't want to take a contingent liability. We say, look, through this credit guarantee scheme, let's set it up for attracting capital into the transmission infrastructure. And if it's a pilot, and if it is successful, we intended to scale it up into different projects, including our corridors, because a lot of our corridors, freight corridors, they require a lot of capital to move in there for us to boost our infrastructure, because we can only be competitive as the continent if our production costs are lower compared to other jurisdictions. That's the only way we can grow and make our economy competitive. The last point I want to make, we should also bear in mind that we're not the only ones as the continent, as South Africa, who are looking for money to flow our way. There are other jurisdictions, and some of them are politically unstable, the risk of causing any diplomatic, Turkey, for instance. Highly unstable, but they've got a rich history around attracting private capital into infrastructure. And I hear the issue about the way in which we are rated as a continent, which is a challenge, because the economies of the continent are undervalued, and the risks are overestimated, which makes it difficult for us to attract capital into the continent. But it will be important for us to move with speed in putting the right incentives, the right structures, and there are great examples on the continent, Lobido. There's another one in Gabon, as an example. I think it's done by Arise company. To your point, that you don't need government to put money into it. You set the right infrastructure. My distant understanding of that industrial special zone in Gabon is that the government said, here's a piece of land, and they gave a lot of incentive, and Arise as an industrial company, they did a lot of work there in industrializing Gabon, but together with other jurisdictions around there. So it's a question, again, of putting a number of incentives, and the continent is demonstrating how best we can do that. I'm aware of another project in Tanzania, in which it's a cross-border infrastructure project to get the private sector investing in infrastructure, because infrastructure, it should be, and it is, a backbone for strengthening our economy. And it's an asset which can withstand inflation. If you keep money, your money can be eroded by inflation. I mean, I saw in Zimbabwe. Okay, okay, let me stop there. Let me, sorry, I take it back. I did not mean it. I profusely apologize.
Thank you. Thank you, Deputy Minister.
I wish I could go to academia, because you're free there. You can say whatever you want to say without any consequences. So
those are very salient points, and particularly around the emphasis you made on the evaluation of having an adequate ROI for attracting private capital towards infrastructure. Vuyo, perhaps from your side, obviously there's, with what Ghulam presented in the morning, the global environment, we're seeing a bit of a shock in terms of development financing and the risk of that drying up towards many African markets, which potentially implies that many African sovereigns would now have to, against already constrained balance sheets, increase expenditure on healthcare, let alone infrastructure, particularly with the USAID funding, drying up. In your world where you sit, obviously you reflected upon the importance of pension fund assets or funding, but how big a risk is this for you, or is it an opportunity in some shape, way, or form?
Yeah, I mean, I think it's still quite indeterminate what some of the impacts will be. But I think, again, going back to the South African market and the deep capital markets and deep savings markets, I think from that perspective, South Africa will be largely insulated against any drying up of international development capital, if we can put it that way. Also, I think a lot of the multilaterals that, for instance, rely on support from the US, I think what might happen, rather than necessarily a decline in the amount of capital available, is there might be a change in emphasis. So I think, obviously, a big emphasis on sustainable energy over the past decade or so. I think what's likely to happen is probably a less pointed emphasis on sustainable energy. And these are, let's call it the multilaterals that are supported by the United States, for instance. But I think, at the end of the day, it's about business that makes sense. If investments in certain infrastructure make sense from a return and risk perspective, I think there will be capital to invest in those projects. And if projects didn't make sense in the first instance, then they still don't make sense. I think also collaboration across borders, as the Deputy Minister just mentioned, is also important. Because of the non-monolithic nature and the fact that you've got different risks in different countries. I mean, I look at TRAC, which is part of the Maputo corridor, was a case in point where there was a cross-border deal between Mozambique and South Africa, and in essence, South Africa risk-wrapped the entire project from a contingency perspective. I do think that certain of those types of actions could lead to increased cross-border activity. And maybe just in parting, I think also in terms of getting projects out to market quickly, I think we shouldn't underestimate the benefit of unsolicited bids. For instance, in the network industries, I believe, for instance, user groups are quite prepared to come out with unsolicited bids that essentially encompass a lot of the development work that should go into driving what the projects should look like for the private sector to invest in. So rather than going through multiple RFI stages, for instance, which is what's currently happening, I think maybe opening up the door for unsolicited proposals that help to drive the process forward quicker could be another means of moving things along.
Thanks, Vuyo. Just as a parting shot, 1 minute each. I know it's a difficult task to do in 1 minute, but Vuyo, we can start with you. In terms of policy reform and how we can revive economic growth above potential or close to potential in many of our markets in Africa, what are some of the things that you think need to be urgently addressed, or what are some of the things that are already being done that we need to persist with? If we could just compress that in 1 minute, Vuyo, then go to the Deputy Minister for his remarks in South Africa.
Yeah, I think looking at the markets that are well positioned, the likes of South Africa, Morocco, and to some extent Kenya, I think the development of local capital markets, the Minister mentioned the fact that risk was being mispriced for Africa. I think, for instance, on the Lekki project you spoke about, we were able to get Nigerian debt markets out 15 years, and this was 2008, was 17 years ago. And I think that hasn't really been repeated since then. So it's really about building out long-term capital markets in country so that there's a better understanding of risk, and make it easier for domestic savings to be utilized towards domestic projects. And then also just highlighting the importance of scale, repeatability, which allows private sector players to really establish themselves and compete against each other and drive down the cost of infrastructure for end users. And yeah, I think that driving down the cost is what makes it sustainable.
Thanks, Vuyo. Deputy Minister?
Economic growth is very important to deal with the macro economic imbalances that we see on the continent, the debt to GDP ratio, inflation, unemployment, GDP growth. So we really have to get our economies growing, and our economies cannot just grow through fragmentation. There's already, Gulem, I suppose you might have spoken about this. I was not here. There's a lot of fragmentation going on in the world. We need more integration of the continent, the infrastructure is a great opportunity to do that. We need an attempt, basically, a synergy of policies. I know in our G20 presidency, we're also working on the cross-border payment, just to make things easier on the continent. And the last thing is that for us to get capital to flow our way, let's not make it difficult, particularly ourselves as government. Let's set up the right incentives for business to come or to be retained, not just to come, because we also have businesses here on the continent. Let's just make sure that we set the right incentives. I'm not allowed to talk about tax. That's the function of the minister. But I'll whisper to him that in certain instances, you might need to do some tax exemption for certain type of infrastructure. But don't tell him that I've said this. It's not within my jurisdiction. Thank you.
With that, thank you so much to our distinguished panelists. It was always going to be a exciting discussion with two brilliant minds. Please, ladies and gentlemen, join me in giving them a warm round of applause. Thank you.